Welcome to All Things Capital. I'm Jane King at the New York Stock Exchange with Courtney Murray, CEO of Coastal Capital, and our guest, Kellyanne Winget, who is the founder and CEO of Alternative Wealth Partners. Great to have you here.
Thank you for having me.
So let's talk about your private equity firm and fund manager, and you invest exclusively in alternative assets. So explain what that means and why private versus public assets.
Sure. So this is obviously like the perfect place to talk about private assets, right? So I've been exclusively in alternatives for almost 15 years. And that's because I really like kind of like the backbone of what built this country, and it's small business. And I saw a gap between how individual investors and the big institutional investors were investing, and there was no one in this kind of middle sector, and no one was giving access to the alternative space, which is basically everything not stocks, bonds, and cash. So everything else, real estate, crypto, small business, private lending, all sorts of different things that individual investors don't necessarily have access to from their traditional financial professionals.
Well, Kelly, I am so happy to have you here. I've followed you for so long. And I know that you mentioned risk. And as we know, women tend to be more risk averse than men. As a well-known advocate for women, when it comes to money, what does it mean for women regarding investing?
I think that it's been a huge shift, especially in like the last 5 years, of like women actively seeking out more financial literacy, like more education. They want to be more active in their financial picture. And I think that, you know, the idea that women are more risk adverse is kind of dated, right? We're not risk adverse, we're calculated. And we want to look at things. And when we make a commitment to a stock, to another investment, to our families, whatever we're deciding to do, we tend to make that decision and see it all the way through. And I think that's the kind of the biggest difference. It's not about, you know, we don't want to take risks. We just take really calculated risks.
Informed risks.
Yes.
Yeah,
informed
very,
risks.
very. So with that said, do you have any insights on how women can start taking ownership of their financial future?
I think it's definitely just like taking the first step. I think a lot of women struggle with like the confidence behind it. There's a lot of talk about women's confidence with money. I mean, girl math blew up several months ago, and, you know, it was kind of made a joke. But the reality is that women are thinking about money. And when they become vocal about it, they shouldn't be shot down, right? And I think that if we can kind of start encouraging each other to talk about it more, that we'll have more access to more information.
Yeah, I loved your girl math article that you shared. I laughed when I read it, but it is the truth. And, you know, you're an emerging manager in high demand these days. And so what does that definition, does it create any barriers for you because you're in such high demand?
Yeah, I think that there's a lot of talk about wanting to have diverse and emerging managers from big money and asset allocators. But the problem is that the barrier to entry for emerging managers, you know, we're not coming out the woodworks with like billion-dollar funds, right? We're starting small, 10, 50, maybe $100 million. That's typically the smallest check size that a lot of these alligators can write. So they can't be 100% of your fund. So it takes a lot of time and effort to try to get to the point where you're managing enough money that you become an emerging manager in their eyes. So there's a lot of that kind of barrier, but I really like working with like the retail investor, like normal everyday millionaires, right? Because I can only work with people that have high net worths. But there's 25 million millionaires in the United States. It's a lot of people that have access to the ability to invest in alternatives. And there's small managers like myself who are managing under $100 million on the way to $500 million or $1 billion that they can get involved in writing $100,000, $250,000 checks.
Wow.
And then you also recently introduced the Alternative Wealth Partners second vintage, the Diversity Fund 2.
Yes.
Right? So tell us about the fund. What makes that up? Why launch a new fund?
So I had been in the space for a really long time, but I had been working on like individual emerging deals, everything from like oil and gas and real estate, you know, cannabis to other types of like medical devices and things. But what I felt was missing was an opportunity for an investor to invest a lump sum of capital in like kind of a mutual fund of alternatives, right? There wasn't an individual investor, if they want to get invested in alts, they have to go out and find $50,000 at a time in individual deals, and they've got to do due diligence on those deals. And, you know, typically you have somebody who owns an HVAC company isn't going to be an expert in like a manufacturing company, right? but they want to make an investment. They want to have exposure in that space. So I created a diversified fund. Somebody could take a lump sum of capital and invest across multiple different asset classes that were all correlated with each other to get a blended rate of return in the alt space.
Okay. Makes perfect sense, actually.
Yeah, I love it.
Yeah. Kellyanne, thank you so much for coming
you.
and explaining this. Thank you as well, Courtney.
Yes.
Thank you.
Okay,
It was great. Thank you, Jane.
Thanks. We'll see you next time.
Thank you.